Today we're going to be talking about digital transformation in financial services. Thank you everyone for coming. I know the three main bullet points you guys want to talk about are customer journey, data analytics, and agile at scale. And I think what we're going to do today, I'm actually Ken Chung, VP of Growth at K2 Digital. You know, I do a lot of digital transformation work, especially in financial services, and I think we need to ask the question of why we think those things are the things that are going to get us to the transformation we want to be getting to, right? Especially in asset management, wealth management, from banks to fintechs. I think we've been looking at this problem and saying, you know, as long as we can do some of these three things from a technology standpoint or from a process standpoint, as long as we embrace design thinking, then we're definitely on the road to transformation. And I think that we need to take a step back and take a broader look at that. So why is there all this confusion in the space? I think it's very, very easy to see. We just look at this diagram here, and we can see the amount of noise and the amount of players in the space, right? I mean, we're literally seeing changes in the entire ecosystem. And when we look at the capabilities of the players coming to disrupt each one of these segments, we kind of say, what is it that's being applied? What is the opportunity? Is it something as tactical as agile and DevOps? You know, the ability to deploy faster to the market? Is it as simple as data analytics, the ability to look at our data, big data, take massive transactional data and do processing there? Is it as simple as saying that design thinking is the way forward? And I think the mistake that we've made when we look at each one of these sectors in FinTech is to say, well, the reason why the new players in the ecosystem are great is because of newer technology. And that's just not true. Even the idea of FinTech as a capability is a misnomer. What is happening is that each player in here is actually bringing a higher level of effectiveness in their digital ecosystem to deliver a much more highly focused customer return on time, right? So if we look at something like Wealthsimple, what we're seeing is that they're taking a very well-defined problem, which is most people are not educated about investing their money, and they're making it frictionless from a customer experience perspective to get onboarded. That doesn't mean that they're bringing to bear the rest of the customer experience journey, which I think is very important. So when we talk about these tactical things around, you know, it started out with a conversation around how do I become more agile? How do I become more of a design thinker? It turns more into what is it that clients are really looking for when they turn to some of these players like a Wealthsimple or a Betterment or, you know, Tangerine back in the day when they weren't part of Scotiabank. And the reality is we're seeing the customer experience coming forward, right? They don't really care how it's delivered. They don't care about blockchain. They don't care about AI. They don't care about databases or big data analytics. They want faster, always on, instantly available. You know, there's obviously a race to the bottom on fees. Everyone wants things that are cheaper, but we're not doing a good job of communicating our value through the customer experience, right? And obviously, the next generation, from a reaching them perspective, technology is important as a last mile, but people want to feel the participatory power of what they're involved with. And we see that in crowd lending. We see that in blockchain, even the idea of what blockchain is, not getting corrupted by all the hype around Bitcoin right now, but the idea of a public ledger, the idea that we're all involved in that, the idea of socially responsible investing. All of these things are areas where fintechs are actually beyond technology starting to reach into that customer experience and customer journey and saying, I want to be more intimately tied to how you think, how you want to live, and where you want to be. So beyond just talking about agile, DevOps, and those are all components of making you more agile and getting your organization to something that I would say you need to be more culturally agile. You know, it's not about these ingredients, it's about how are you getting there as new things come up. Today it's blockchain, tomorrow it's smart contracts. What is coming after that, and are you ready for that battle? And so when we look at the ecosystem, I think it's very easy for us to frame the conversation in a way that says there are established players who are behind the game, and then there's our pioneers and disruptors and heavyweights. And I just want to take this chart for a second and start to dispel that myth. different players in the ecosystem are better at different things. So just becoming an agile organization doesn't make you a disruptor. Just adopting design thinking doesn't make you a disruptor. Just having an innovation lab definitely doesn't make you a disruptor. And we know that from 30 years ago when everybody had a different name for those things. They called them incubators, right? And this graph clearly shows, even in the top right, something that we've been trying to innovate for 30 years, payments backend, continues to see a lot of money and investment, and innovation is required. And what's very interesting is on the left, we like to divide everyone into established and pioneer, right? We like to say banking infrastructure, KYC, CDD, financial security, remittances, global payments. Those are areas that are boring, and why should we care about those? Obviously, much more agile and nimble players are in personal finance, retail investing, crowdfunding. And the reality is that this division is a false division. And I would say that because the established players have something that the new players don't. They have institutional knowledge. They have thought capital. They have methodologies for working with clients in ways that really transcend what the digital channel is offering in the new incumbent. So you can be an agile player. You can bring new products to bear. But let's face it, even in the news last night, what were we hearing? People were taking out second mortgages. People are taking out massive loans to go buy Bitcoin. And I will tell you, that is probably a very inertia-free transaction for them. It's fully digital. It's 24/7. It's fully self-serve. However, if they talk to anyone from an established place, anyone with institutional knowledge who wasn't just obsessed with fees, transaction speed, and having a fast digital channel, I think a lot of people would sit back and say, why are people taking that much risk? Are they aware of the risk that they're taking? And what should they be thinking about from a services perspective to actually take care of people and their families? Because I'll tell you, especially in Toronto, at least up here, where people are buying homes of $1 million, if you're taking $800,000 in equity out to go buy blockchain right now, you are probably not aware of the risk you're taking. And I think there's a happy medium between, we want to create these happy grids, who's established, who's a heavyweight, who's a disruptor, and who's a pioneer. The reality is that it's all synergistic. Everyone needs to play together, and everyone needs to think about how this ecosystem, from a cultural agility perspective, adapting to these new generation of consumers coming online, can actually succeed. And I think this is driven by this image here. So when I bring this image up, people are thinking, what is Ken saying? Is Ken saying this is the apocalypse of financial services? And that's absolutely not what I'm talking about. That's the hype cycle, talking about retail apocalypse. We heard about real estate apocalypse. We heard about grocery store apocalypse when the internet was invented. There's no such thing as an apocalypse. What this is, though, is a realization that we as human beings have changed the way we work, have changed the relationship between ourselves and money, and have changed the way we think of asset. And it's very important, back to that cultural agility, whether you're talking about doing agile DevOps or any of that other thing, to get back to the customer experience. And I think all of you guys who are sitting at home, just think about this carefully. I think a lot of you are all senior leaders, probably from technology or marketing at your corporations. You all have kids. Think about how you're interacting with your kids on this question. So tonight, when you're making dinner for your kids and they're on the third floor on their cell phone, pretty sure you're not going to yell up to them or have a conversation. You're going to WeChat them or Hangouts them or text them or do something, some digital channel. Ask them how they think about money. And that's what this is about, right? They don't even understand what cash is. They don't even understand why they would ever go to a branch. If you ask someone why they would want to own a car, especially in their teens or early 20s, they'd say, why would I want that financial burden? You start getting into people into their early careers and they start saying, well, why would I want a mortgage, and why would I want a cottage? Why would I want to own any of these things, right? Why do I want asset in my life? I really want to live on OpEx. I really want to live the experience. And our financial services as a whole have not really adjusted to that concept in terms of engaging this generation in the channels they live in. right? So if people are thinking about financial services this way, and you're still thinking about how you can use your agile DevOps to increase the speed of mortgage onboarding because you want to take some PDF form and make it automated, I'd say you're totally missing the boat, right? Prestige, social connection, collaboration, the idea of social responsibility. I didn't hear any of that in I'm going to take a PDF form and now make it available. I eliminated my fax machine, right? The reality is most people are thinking of design thinking, agile, and big data AI as a way to sell more in a traditional channel. And the reality is that people are doing transactions in WeChat right now. People are thinking about getting instantly approved on mortgages, not even thinking them as mortgages. You know, the brands that are most successful are not the ones that are trying to take the digital ecosystem and just tack something on the front of it. They're the ones that are saying, I'm the unbroker mortgage broker. I'm the unadvisor advisor, right? Sonnet is a successful brand because they purposely distance themselves as far away from their parent company and say we're easy to work with. And that we're socially responsible and that we're this and that. So digital engagement and digital onboarding goes much deeper than just saying I'm doing agile or technology development in a different way, or that I'm just hitting customer experience. It goes to how fast can your people understand the clients, and then from that understanding align your organization to deliver technology to the market the fastest. And you guys have to ask yourselves the tough questions in your teams, in the people that you work with. Are any of them right now touching Bitcoin? Are any of them actually involved with the things that are changing the ecosystem that you're serving your clients? Because I know one of my good friends is probably on the line, Martin. He's at CI Investments. I would challenge him to ask his department of, I think it's pretty huge, you know, dozens of people, how many of you guys actually know how a blockchain transaction works? How many of you guys are actually invested? How many of you guys actually understand how the future of digital will work in this space? And how does that affect investing? How does that affect our customer engagement? Because if we're not creating that environment, if we're not creating that work agility, then what is all of the technical layer we're doing for if the staff aren't going to understand it, aren't going to feel it, and aren't going to get it to the clients? And we really need to ask ourselves those kinds of questions. And it's not just about the philosophical here. Like I think a lot of you guys know me who are on here. I obviously love to go for the visceral. I love to talk about the emotional. I love to tie that to the human nature. Numbers don't lie. So let's have a look at these numbers from Morgan Stanley. You know, a ton of investment VC has gone into technology and fintechs, especially starting in 2013. We can see the annual doubling. That's why we saw the rise of the Wealthsimples, the Borrowswells, the Planswells, the Betterments. But as we can see between 2015 and 2016 and 2017, the trend continues. VCs and other investors, you know, Ashton Kutcher, all of these guys have figured out that just dumping money into the front-end customer experience, long tail, things like Wealthsimple is not going to get you there. You know, Wealthsimple, we break down the numbers in a second. We're very fact-based here at K2 and Pure Facts. We're going to see that, you know, the investment just isn't returning, and the reason why the investment isn't returning is because it's not hitting the clients from a complete life cycle perspective, right? We may be only doing the bottom of the channel development. So here we can see more numbers that confirm that as we've continued to go in terms of the numbers of deals and the amount of investment in pure fintech. And the fintechs have the advantage of starting with all of these methodologies that we hold as the holy grail, right? They've started from a big data perspective. They've started with analytics. They've started with design thinking. They've probably got agile DevOps in their back end, so they're able to bring the innovation out faster. So the question is, why then is the investment continuing to wane when they aren't generating more profits? Shouldn't we be putting more money on the fire? And the reality is we aren't. So that should start to send a signal to us collectively that something is up here, right? If the VCs aren't dumping the money in, disruption is not really getting to the end of the channel. We have to question ourselves. Is agile a tool? Is our technologies a tool? And who are we fighting, and what is the fight? because the traditional battle lines are drawn on established versus disruptor. They're drawn on, bank versus fintech. They're also drawn on customer, demand versus what our org can do. And the answer is none of those, in my opinion. I like to be a little bit controversial, but the battle isn't out in the marketplace. The battle is with yourself. If you can honestly take a look at your organization, and I used to work for BMO, I've worked for BAE Systems, I've worked for startups. At BMO, we used to call ourselves the Bank of Manual Operations, right? And there was a reason for that. If I were to look at my department, ultimately I had a 7x7, but as part of a larger group of 1,500 people, were the enemies outside? Was it the client? Was it the fintech? Or was it our own ability to decide how to use these tools we had, and not to do individual ad hoc projects, but actually to raise the bar in the culture to make sure that 1,500 people are actually delivering value to the clients, are excited about that, and are learning at the speed that's required to innovate in the marketplace today. And we have to look at that. We have to look at how we get innovation. It's not as simple as saying I have DevOps in one pocket of the organization. If people aren't living it, they're not breathing it, and it's not transmitting, I think we don't have the right ingredients. So to that end, I went from tactical stuff. I know that our marketing emails use specific keywords to get you guys all excited about things, especially around agile, DevOps, and all of that. Those are hot topics. In fact, many of you guys are clients of mine and have worked on those specific projects together. But we have to take a step back and say, what are the models for innovation today? And especially in the larger orgs, when we talk 1,000 to 40,000 people, we tend to be able to categorize them into 3 methods of acquiring innovation at scale culturally. The most obvious answer that 25% of organizations would say is that I'm going to buy someone. And there's great examples for that. We'll talk about it. That one's straightforward. Then there's the little more murky stuff that we would talk about, what we call hybrid. And I've seen this in all of my clients, the debate. They might not be RBC, but they'll say, should we do an incubator or a lab? Should we do a digital garage? Should we do this? We've never done this before, and we're going to do it. And all the different machinations of this digital factory, operationally integrated subsidiaries. So a great example of that would be CIBC and PC Financial. And then there's what I would argue is the better way to go, which 39% of orgs are looking at now, which is what I would call feeder. And that's where we talk about partnerships, referrals, and platforms. And some acquisitions actually start as a feeder channel. So when we look at Tangerine acquisition by Scotiabank, obviously Tangerine was ING. ING developed a great way to do a high interest savings account, and then eventually Scotia bought that innovation. So let's talk about that from a cultural perspective, because I think I've brought it up. I've opened up Pandora's box, and I'm saying this is probably a good model. We know that 25% of global banks and large financials are looking to acquire innovation and looking to acquire an agile DevOps culture and acquire these capabilities. And in some ways, when we look at the Scotiabank Tangerine acquisition, we might think this is a picture-perfect method for doing that, because Tangerine had gone cloud DevOps. They had deployed tons of innovative capabilities to the marketplace. If you think about the first guys to Apple Watch banking, so voice banking, if you think about the first guys to do check scanning, definitely Tangerine was the way to go. And they're doing iris scanning and all kinds of great things. However, the acquisition isn't really that old, right? It's since 2012. And I will tell you, this is back to my theme of cultural agility. If you don't address cultural agility and process agility first, then you may get some interesting facts. So let me drop some interesting facts on you guys. Year on year, Tangerine's business unit revenue has dropped 36%. So between 2016 and 2017, Tangerine's ability to generate revenue has dropped 36%. Their net assets under management have dropped significantly, and in fact, if you pin this to the point of acquisition in 2012, their net revenue position has dropped in half. So what does that tell you about acquisition? In some ways, you get a short-term capability. You definitely get cloud. You start to try to merge these cultures and adopt the technologies and processes. You probably spend a lot of overhead trying to do what the fake thing known as BAU, or business as usual. And then you end up with the parent company coming down and removing independence from the subunit, which is exactly happened to Tangerine. And in some ways, this level of innovation and this level of working is highly suboptimal. The second method we talked about was the hybrid model, right? So PC Financial spawned up. It was purposely spawned up as a fully independent unit. All backend, or what we call legacy operations, I'm going to use the air quotes, we're running off of CIBC's backend and still do. PC Financial has taken all of the standard retail banking operations and brought them over. And then they've also added additional loyalty rewards programs and technologies into the conversation. The beautiful thing about this is they had enough autonomy to establish fully independent agile DevOps operations, cloud operations, and they also went out and did executive searches globally, actually, to recruit some of the top agency talent into their ecosystem. But what's really funny about this is when you visit the PC Financial building, which is right next to CIBC, actually, interestingly, in the downtown core of Toronto, what you will find is they have harvest tables, they have the Kanbans, they have all of the design thinking whiteboards, they have big open glass spaces, and they do all of their work in this beautiful little cacophony, what I would say a segmented order. And then you go to the CIBC offices and the culture has not cross-pollinated, the agility has not cross-pollinated. You have a greenfield operation right next to a legacy brownfield operation, and there's not much cross-pollination happening from a agility, from an ability to adopt new technologies perspective. You literally end up with a Tesla right next to, well, let's just say CIBC, which is a great banking institution with tons of thought capital, with tons of products that should be brought forward to people who want something a little bit more complicated than PC Financial can have. But yet again, here, we're not communicating the channel, we're not taking advantage of the synergies, and we literally have people working at CIBC going, why are the PC Financial guys getting it so good? And we recently saw the same thing in Scotia Digital Factory, which has now officially been declared a bit of a failure at this point from a cultural and deliverable perspective. So we see this repeating every 30 years. We rename what the heck these things are. I'm sure we'll think of something else, a digital lighthouse, digital spire, digital planet, digital moon, but at the end of the day, it's all the same thing repeating. What I do see from a positive perspective is a move towards what I call feeder channel. And there is also a realization from a lot of the fintech ecosystem that they don't have the institutional knowledge to actually bring forth the more complicated midstream and upperstream product to clientele to actually best assess risk and take care of clients from a long-term perspective. No one would argue that anyone has more pedigree than HSBC from an overall international banking perspective. When you look at corporations that operate internationally, when you look at individuals that are in a position to be relocating and working in multi-jurisdictions, HSBC definitely takes care of their clients, and you would never find a client that says anything different. What's interesting here is that there are incubators here in Canada and worldwide. In Canada, I think we would think of DMZ, and we would think of Mars. We would think of these different third-party incubators. So they're not internal, sinkholes for funds. What we find is the floor in Europe are incubating companies that understand the gaps in that client experience journey. And what happens is organizations like HSBC get to participate not only in the third-party funding of those incubators, but they get to evaluate and look at carefully the partnerships that could come from that innovation cycle. So TradeShift gets to work at the speed of light. They get to design a whole new asset management platform. They get recognition through the floor that there's a social connection to HSBC. Together they start working together. They actually work on slightly different parts of the channel that then overlap. And culturally, the two organizations start working together, start generating deal flow, start seeing how culturally the organizations can work together and how different ingredients in those recipes can start to carry back and forth between the organizations to ultimately get you to join operations. The jury's still out on whether a Wealth Simple or a Betterment or any of these guys will eventually start to adopt this model, because when we start to look at the numbers, we'll see it's a very similar kind of relationship coming out of that too, right? It's the bottom of the channel, the people with very low amounts of funds to invest, that typically the big asset management and wealth management houses would never touch in their channel, and the branches would be taken care of, right? So there's definitely an opportunity here to talk about how this collaboration, and that's why I say it's a deeper question. We started talking about agile DevOps, we started talking about big data analytics and all of these technology platforms. We can bring that into CRM, we can talk about Salesforce, we talk about all these seismic shifts in technical capability. But until our orgs are willing to admit that there's something else that needs to be looked at, which is the future of work and the future of learning, and how quickly we bring that learning to the forefront, we think about that, we are going to fundamentally have trouble competing. So we need to think about this, right? What is it that we're actually measuring? What is it that we've been talking about? I think in financial services, we're quick to go to infographics and calculators and all of these different things. And we talk about alpha and fees, right? We're constantly sitting there on the spreadsheets. Customers need to get their heads away from that, and we need to get our heads away from that as well. We need to start asking ourselves about intrinsic value, about gamma, not alpha. The idea that we have the ability to influence people through the customer journey, and we need to figure out how to do that in a hybrid model. It can't just be a guy that I go see about my money when I have over $2 million, and it can't just be a digital channel that lets me look up a mortgage rate without understanding any of the advantages of prepayments, without understanding anything about open and closed. I'm just going for a number. And I think we need to get ourselves away from the thought process of just doing numbers. And I think what's happening in the services industry is we are focusing on the lowest common denominator on two fronts. One is we want inertia-free customer experience, and the other is we want accessibility, but we're low on quality value to client. So what do I mean by that? Well, let's use Wealthsimple. Really, net overall, they've only got around 758 million AUM. I'm sure that's gone up by 250 million since I made this slide. But still, that's less than 1% of all assets under management. Really, they deal with the part of the channel that is tiny, that people who don't really have that much money to invest and aren't that educated, but that's probably good because their simple customer experience is based on the fact that their algorithms and the product they're offering are not that sophisticated and can actually handle complicated situations, complicated householding, and certainly actually matter to your family. So what we're saying here is when we actually drive back up into gamma, what we're seeing on the left is traditional services where the share of households over 2 million have increased in the traditional advisor space. We see that the average household income has drastically increased again in the advisor space. And I would say this paints a bad picture for how we're collaborating and how we're innovating. And let me explain. If a regular financial advisor who has all of that thought capital, who can actually take care of people's families, is only going to start accepting people who have over $2 million, what is the customer experience for everyone under that? Are we starting to push them to the branch? Are we starting to raise thresholds within, Nesbitt Burns? Are we doing all kinds of bad things that ultimately mean less Canadians and less people in financial services are getting great advice? Or can we flip this on its head and say Wealthsimple is just what it is? It is only going to be capable of taking care of the long tail. Can we take some of the customer journey? Can we take some of the design thinking? Can we take some of their technology in terms of how they deploy and how they do that and apply that to the traditional institutional advice, capability, thought capital, and allow a traditional advisor to actually scale out and serve more people? Because believe me, we know already that when an advisor is telling someone something as simple as don't sell, which your digital platform may or may not be doing properly because it doesn't understand people's life situation, that over 15 years, that person is going to have 3.9 times more asset. How do we get more of the human ability We've gone into focusing on technology way too much, and I'm a computer engineer, I'm a technologist. We've made a mistake. We need to come back, and we need to get back to hybrid innovation. And the numbers don't lie. We talk about Robo. I know this is a hot topic. Many of my clients are into Robo. From a market share perspective, Robo is extremely insignificant. It is a channel to talk about. It is a channel where we're going to want to service 24/7. But we do have to recognize that today, those Robo advisors are not capturing. We typically call this sales, right? And that's a mistake as well. Are not capturing the complex capability and the foresight and the long-term knowledge to take care of people's family needs over the longer term. And one day this technology is going to get there. That's why we want the cultural agility. That's why we want to adopt all the new technologies that are there. But I will tell you guys, and I know K2 is a digital transformation firm, so I should be telling you the technology is all on the shelf. Just come see me. We're going to put it together, and we're going to get you there. And your Robo is going to be selling, you know, $500,000 high net worth deals every day, you know, every second. The reality is we're not there, and we have to admit it, and we haven't figured out how to take the really brilliant capability of that senior advisor that's at Nesbitt Burns and make sure that hundreds, if not thousands of people can benefit from that instead of what it is now, which is, you know, 50 to 100. I think most don't even with assistance, don't even want to service that many now. We got to think about what we're doing here. And so that's part of my theme, right, is yes, take all of those technologies, increase the connectivity between the business and the technology, make that conversation work, but also get the culture of your org from technology all the way to digital marketing, all the way to front-end salespeople, to be thinking about what this relationship is, which is back to a gamma-based customer journey. Give people knowledge, get intimate with the family, understand what's going on in the family, understand how we can optimize what's going on. Because the reality is everybody's going to tell each one of your orgs every day that you're in an apocalypse. Oh, you're in a data apocalypse. You need to have a data warehouse. Oh, well, data warehouses are garbage now. It's an apocalypse there. We got to go to data lakes. Look, cut through the FUD. The reality is the internet didn't disrupt anything really that extremely, except for our society is getting a lot smarter faster. You know, real estate agents, this image here, you know, when the internet came down, everyone said real estate agents would be over. I will tell you, I just bought a house in Toronto. I'm one of the lucky people. I don't know if the next generation will get to do that. My real estate agent had intimate knowledge of what my family needs, when we need it, what areas we love to live in the city, how the city functions, and there is an intrinsic value to that relationship that we can talk digital channels till we're blue, but unless we understand the interface between the digital channel, how to accelerate that channel out to the market, which is a big problem right now, I know a lot of you guys are solving, but until we get that intimacy at scale, in financial service, I'm not talking real estate, because in real estate they've actually solved it, right? We've got condos.ca, we've got realtor.ca, they're generating a ton of leads, they're actually self-stratifying their clients, they're running analytics on price to understand what their client can afford, they're running analytics to understand if their kids are downsizing, upsizing, or what's happening in their life. We need to bring that to financial services so the best advisors can be even better and the mediocre advisors can be Iron Man. And unless we're doing that, unless we're applying our technologies to have a higher return on time invested in the capabilities we're bringing to market, I would question what the purpose of those individual projects are, especially if, let's say you do a mortgage onboarding form and you say that's for Agile, but after one full round of staff turnover, the rest of the bank is not Agile, the rest of the capabilities are not Agile, and that form is up on the screen, it's not a PDF anymore, but once it gets back, somebody's still printing out a bunch of stuff, and people are running around in the back to do manual processes. That's not generating value for the client, that's not getting your institutional knowledge to the field, that's not highlighting what makes your established position great, and it definitely doesn't amplify on the digital channel. So I think, you know, we need to take a step back and say, what do we need to prove? Well, you know, VC is stepping back, banks are starting to collaborate more, technologies are starting to become more pervasive. We need to learn from the channel pipeline. We need to check ourselves. We need to keep scanning. We need to figure out how we can have an innovation pipeline inside of our organizations, and stop thinking about share of wallet. Stop thinking about the tail. Start thinking about how fast we can innovate and how strong we are for the fight. And from an evolutionary standpoint, we have been missing the boat, because the biggest piece that we're missing is how quickly these conversations can happen in our org. I know from working with a lot of my friends, some of them who are here today, you know that there are people in your organization right now who, to a T, if you fully empowered them, would know exactly how to do agile DevOps, have been burning a hole in their pocket to tell everyone in your company about how to do that. You know there are people who know how to do design thinking. You know there are people who know how to connect the business and salespeople to the back-end operations. Ask yourself why those conversations are not happening. Take a deep look at whether just inserting another tool into the stack is going to do anything. I've heard things this year alone in 5 of my key client portfolios. We're going to go into Salesforce 2.0. And I always ask myself, what is Salesforce 2.0? What was Salesforce 1.0? What did that mean to you? Yes, I'm sure you were sold on customer experience. Yes, I'm sure you were sold on a technology perspective. Ask yourself why Salesforce 1.0 didn't work. Was it the technology? Was it the implementation? Was it the agility culture? Was it the process adoption? We need to take a step back, because I'll tell you, take Salesforce out of this. I hope there's no Salesforce people on here. I love your product. That's not what I'm talking about. Whether you're talking about Salesforce 1.0, Salesforce 2.0, or Salesforce 3.0, we're replaying, right? And I'm just going to tell you my age. When we talked about business process management, when we talked about BSM in technology, we said it was going to give all these benefits to clients. We said it was going to be all great. And now we're doing the same thing with Salesforce. We've all done BPM 1.0, BPM 2.0, BPM 3.0, and it's not working. It's not translating for the client, and we need to culturally think about the future of work and talk about where we're going. So I'm going to take a little bit of a pause here, because you guys can tell I'm the chief talking officer here at K2. Love talking till my throat is dry. But there's a reason why I'm putting a black slide here. I'm a rinse and repeat guy, right? Like, what is the fight? The questions you should ask out of this meeting are, what is the fight we are trying to fight? Who are we trying to fight? Are we fighting internally, or are we fighting externally? And what is it that we need to change? When we talk about loaded words like agility, when we talk about loaded words like command and control structure, which quite frankly we've been running our companies the same way for 50 to 100 years since the assembly line. Whether even the idea of supply chain is an assembly line concept. And then are we thinking about consistency and thought leadership the way we should be in terms of empowering our employees? And what is the relationship between those operations? I know it sounds boring. It sounds like I thought we were talking about digital. I thought we were talking about agile. What is the linkage between that? And what is the linkage between what we are talking about and these fad words, right? Because I think you guys are all getting calls and emails every day from 100 different people saying, if only you did AI, if only you did chatbot, if only we do blockchain, we're going to be an innovative company, and that's the formula. My product's going to do that for you. And my argument is no, because we got 3 bubbles on here. Tomorrow it'll be 300 bubbles. That's not the key. The key is when your people come up with new ideas, how quickly, and it's not about failing forward or failing fast, because nobody's failing. It's how fast can we look at this technology, how fast can we look at this new way of thinking. If people want to transact in WeChat, if people want to transact in Snapchat, if people want to get a mortgage approval in Snapchat, are your orgs even thinking about that? Do your orgs even have a way that conversation makes itself into a meeting? And it's not a negative. It's, wow, yes, we should be exploring this, and should we be innovating? How can we think about these things? And I think that's where K2 and PureFacts think about this as a complete continuum. So when we started this email to you guys, I apologize for the bait and switch around digital operations, around agile, and around these are all the keywords that will maximize SEO. But the message is, you're not going to get to the customer experience on the left that you want without the digital operations you want on the right, which ultimately comes from the ability for your employees and your organization to culturally adapt to changing conditions. If you asked people 10 years ago at the LCBO whether they would have to design systems to account for legalized weed by July 2018, I think they would say, "What are you smoking?" And you would tell them what they were smoking. So I think this is the point. If you want an agile org, yes, agile DevOps is part of it. Get going on that. Get the smartest kid in there who knows DevOps, who knows infrastructure engineering, to start spending some of his time on that. And certainly don't create like a full-fledged incubator. I think that's going to be a lot of money dumped in a hole nowhere. But ask yourself how you can create structures and ways for working with your organization. You know, the one thing that K2 and PureFacts focus on is looking for bite-sized chunks of transformation that allow this conversation to happen. And certainly we're always open to those conversations with anyone on the bridge or anyone out there on how to make this, what we call the intelligently enabled enterprise, especially in financial services, wealth management, a reality. So with that, I've had you guys on the line right after lunch. I'm sure I put you guys back into a food coma for roughly 40 minutes, and I appreciate the time. I know how busy everybody is. So with that said, I'd like to check out the chat and see if there are any questions in here. We do have a question here from one of our attendees, which is basically saying, Ken, you seem to be talking out of both sides of your mouth. I'm just going to re-say it the way I am. Anyone who knows me, this is not what the person typed. But they're basically saying, you seem to be taking two positions. On one hand, you're saying we should be innovating. And on the other hand, you're saying we shouldn't be doing incubators or innovation labs. I really don't get it. And my answer would be yes. The answer is just yes. That is super confusing. Why am I asking you to do this life cycle here and asking you not to do a lab? It's not that I'm not asking you to do a lab. I'm saying that labs and incubators do not generate the continuum that you see on this screen. They do not impact operations, and the way they're currently being implemented, they're focused more on the PR and the recruiting side than they are focused on thinking about how employees across the entire org are going to be enabled and how we make sure that this concept of lifelong learning actually does penetrate into the daily lives of your employees. So there's a healthy balance here, and I think part of what happened with a lot of the ones you're seeing fail now is there's not enough focus on the right side of the shop. Let's see if there are any other questions in here or chats that have been sent in. We have something coming in from the email channel that is saying, why is there such a focus on operations? And why is this important when the battleground is on the front end? So, that's a good question, and I think those of you who know me know that I talk this till my face is blue. But I am fundamentally a data analytics guy. I was born in startups. I was born in analytics, BI. Back when BI wasn't a real thing, we were doing Malcolm Baldrige, Six Sigma, all of that stuff, balanced scorecard. And the one thing that I think people need to understand from an operations perspective is you need to have clean hands. You need to have operations that are delivering data that matter. And that also goes into the Salesforce 2.0, 3.0 conversation. Garbage in, garbage out at scale with big data is not going to produce a great customer experience, right? And just as an example, let's use a visceral example. There was a Robo that was released, I think, a month ago by one financial services company in the US. Really great idea on a digital experience and intimacy perspective. It did continuous unstructured data monitoring of you and your family, and then recommended positions and changes to your portfolio holistically based on what it detected. And it was trained a certain way to be very intimate and very close. So here's where things go wrong when your back-end data management, when your training and your operations and your overall business continuity don't make sense. This thing did the analytics for one of the customers and realized that a negative event had happened and that the beneficiaries stood to benefit. Now, I don't know about you guys, but when the term beneficiary is triggered, it means some people have passed away, and as a human being, we know right away that we would have said, no, this is not a good thing that we want to engage on. Unfortunately, the technology that was used here was not trained correctly, and started out with congratulations that you've had this event happen, which again, unless your overall focus on operations, on continuity, on the right data management, on the right empowerment of your employees to realize that there are edge cases to happen, you're never going to get to hyper-personalized products and services that actually reach the client in a sane way. So those are great questions. I'm just actually polling here right now. It doesn't look like there are any other ones in here. Let me just see. Just pulling this up. Have you thought about the possibility of a bank of Amazon or a Facebook Financial entering the market before 2020? Their advantages would be enormous: data, UX, immense customer loyalty. How can employees bring it together? Okay, that's a great question. So I'm actually going to turn this around. It makes no sense, this question. It's a great one because everybody's asking it, including the employees of the banks. Because I was an employee of the bank. I had the CTO of the bank sitting. I managed to get myself into a roundtable with 15 other managers. And this question was posed directly to Jean-Michel Array, the CTO of Bank of Montreal. What's going to happen when the Bank of Amazon or Facebook enter the market and destroy us? And it was one of the best learning opportunities I've had in my life. It was 4 years ago, so obviously a little bit different from now. But he smiled, then he chuckled, and he said, guys, you're asking the wrong question. Because Amazon and Facebook have amazing customer experience for what they are, which is you as a product, but they don't safeguard the economy. They don't have people's financial assets in there, and they certainly are not held to the standard of protecting people's nest eggs and providing services around that. So what he meant by that was, even if the Bank of Amazon were to be spun up tomorrow, which we're already seeing, right? There's an Amazon credit card, there's Google Payments, there's all kinds of PayPal credit products, and even high interest savings accounts now coming in. PayPal's looking to get into blockchain to provide retail banking services. The reality is that what the banks need to do is learn exactly what you said around data, UX, and customer loyalty. They need to increase their capability there. But the Amazons have a very long way to understanding how to take care of clients from a financial perspective. They have a very long way from creating complex products and services that would actually survive in the market for a long term, which is why they always start in credit, because it's a third-party product. So that's a great question. And I would also question the deeper thing here, right? Right now, Amazon and Facebook and these orgs, including Zappos and others, have figured out how to create everything on the left here, which gives them a huge advantage. What's going to happen to them when they actually scale fully out on the right side? Are we sure that Amazon is going to create the best environment for the employees? Are we sure that these places are going to carry forward and talk about the future of work? Because I'm not fully convinced, and I think that the jury's still out on how we actually create living, breathing enterprises that survive robotic process automation, that survive AI, that surpass all of this and provide great culturally aligned, culturally agile products to not only the clients but to the employees. So that's a great question. With that said, guys, I know how busy everyone is on a weekday like today. There seems to be no other questions coming in. So with that, I will be signing off. With that said, if you want to reach out, I know a follow-up email will be coming from us. Feel free to reach out to me directly or to anyone on our team here at PureFacts K2. And we look forward to interacting with you on this subject. Feel free to vlog us back, spam us, write on our LinkedIn, tell us how poorly or well we did. And we look forward to hearing from you and continuing the collaborative conversation. With that, I hope you found this useful, and see you on the flip side, guys. Take care.